I'm now starting to wonder if the Fed has painted themselves into a corner that there's just no escape from. Once they started QE again, of course, the market took off. Um, but markets need to have normal profit-taking events, and if they don't, then they um, take off and become parabolic and a bubble. And we're certainly in a mini bubble here, and I would um, argue that, well, clearly, the plunge protection team stepped in Monday morning, stopped the decline here, and that was the opportunity for this, for some kind of a profit-taking event, for sentiment to cool off a bit, and normalize this bull market rally. But instead, the government stepped in Monday morning, stopped the sell-off, and at this point, they've stretched price so far above these long-term moving averages that I don't think they can stop QE. If they do, um, we're going to have an extreme regression event that's likely to take price all the way back down um, to these long-term moving averages. So the rubber band has gotten stretched a long way to the upside. There's going to be a lot of force trying to drag it down. The only thing holding that off right now is the Fed just continues to print billions of dollars every day. If they stop printing, this market's going to collapse. If they don't stop printing, they're going to turn this from a mini bubble into a full-fledged bubble, and in that case, the bull market may end sooner than I was anticipating. I was I am anticipating it's got another 10 or 15 years to go, but not if they create a bubble early. If they create a bubble now, then when the bubble pops, then that'll be it for the bull market, and it could end much sooner. So I think they've gone, or they are employing a strategy from which there's no escape now. They can't stop printing, because if they do, they've stretched price too far above the long-term mean, and it's going to cause a huge crash. If they keep printing, it's there's a possibility that they turn this from a mini bubble into a full-fledged bubble, and then the end result of that is not going to be pretty. So they painted themselves into a corner from which I'm not sure there's any way they can exit now. So while this is going on, all of this money printing all over the world, of course, the ECB and the Bank of Japan are printing just as hard, if not harder. They want to, of course, keep their currencies weak against the dollar. They want to prop the dollar up. This has got to cause massive inflation, which it is right now, but the inflation is being focused in the stock market. And I have to think at some point that inflation is going to start leaking into the commodity markets. And it looks to me like it probably already has begun in gold. It's already broken out of that 6-year basing phase and is above that 1370-ish zone. The next clue will be to watch the CRB and see if we get our 3-year cycle low here pretty soon, and oil. And if those start to move higher in the weeks and months ahead, that would be an indication that some of the huge inflation that is being forced into the stock market is starting to leak into the commodity markets. And then, as I've been saying for a long time, recessions are caused by a spike in inflation, specifically a big violent spike in the price of oil. And if all of this inflation that's going into the stock market, if some of even just a little bit of this starts to go into the commodity markets, then we could have serious problems somewhere in the years ahead.